All that glitters is indeed gold.
It is, yes, absolutely.
What do you make of this rally, and is there more?
Well, look, I think we have to put in the wider context. I think over the last year we've had a very good run for gold because of all the uncertainty that we're seeing in global markets. In the last 48 hours, this has been amplified by, the fact that the Trump administration is very clearly doubling down on its tariff, trade war policies. And I think this is really spooking investors that, particularly those investors that went all in into U.S. equities because of the Trump administration. I think there's a realization that things may not pan out as beautifully as everyone expected. And, you're seeing an immense flight to quality. And on top of that, you're also seeing some of the rate expectation trade. If the U.S. enters a recession, there will be rate cuts. So that also helps.
But a lot of analysts who've come to our studios and who we've quizzed about gold's upside from here say that this is the best it can do, like 3,000, 3,200 tops.
Look, I'm more or less aligned with that view. Whether it's to 3,200, 3,500, it's very hard to predict the actual top. But I would tend to agree that we are close to the top for the price. More than anything, because I do expect that as the year progresses, we will have some clarity on trade policy. And actually, the administration will not allow the U.S. to enter a recession. So as things calm down, the positives for gold are not obvious from here on.
And taking you back to the comments you were making about how gold has benefited from the bets about monetary easing from the central bank, and I think you just said if there's a recession, we will see rate cuts. We've had a couple of guests already on today. One just a moment ago who said he doesn't see any rate cuts at all from the Fed this year. Another one who said there are 3 priced in, we'd be lucky to get 2. Because even if we get a recession, and it does seem that there's a willingness by Trump and Besant to let the economy be the collateral damage in order to achieve their long-term goals, sort of structural rebalancing, etc. We might also get inflation, in other words, stagflation. So how would gold perform in the face of stagflation, and would that tie the Fed's hands?
Look, I think if we enter an environment of stagflation, gold has even more upside.
As well.
Yeah, absolutely. Purely because of the immense flight to quality that we'll see in safe haven buying under these scenarios. Having said this, I would agree with your other guests. Whether it's 1, 2, or 3 rates, it's impossible to predict in my view. But I do agree that the bulk of the rate cuts are behind us. And this is on the back of my pretty strong expectation that I don't actually think the administration will allow the country to enter a full-on recession.
Why are you convinced
because
they wouldn't allow that?
One of the 2 campaign promises, one was immigration, but the other was I'll fix the economy. And sure, you could make the argument that damage it short term to fix it long term. But hey, they're going to have to think about the midterms in about 6 months, 12 months.
Does that mean we're going to see a flip-flop on the tariff policies?
I think
which would really undermine their credibility.
Well, I think there's a way to phrase it and position it, right? Ultimately, if he can achieve certain deals, I think he can position it as a win. I do believe that the more extreme sort of trade war will be avoided.